The global financial crisis of 2007 to 2008. It started with a crisis in the subprime mortgage market in the US, which developed into an international banking crisis after the collapse of the investment bank Lehman Brothers. The excessive risk-taking by banks like the Lehman Brothers turned into a global financial impact. Attempts by financial institutions to prevent a possible collapse of the world financial system weren't successful enough. The result was a global economic downturn, the Great Recession, which was followed by the European debt crisis.
Many countries are still suffering from the effects of the crisis, but how big was the impact and what were the effects? Let's focus on the UK. The impact on the UK was bigger than on some other countries, but why?
The UK had no big manufacturing base, and previous growth depended on financial service and activities, which included, for example, house buying, which is dependent on credit. So when house prices went low and credit sources went dry, it had a negative impact on the economy, which had long-term consequences. Financial reports have later shown that the UK depended too much on service industries and not enough investments in businesses were made.
What happened to the banks? What did they do?
Well, as banks realized what was happening, there was a reduction in bank-to-bank lending, and financial institutions, which continued to borrow, found that the rate for interbank lending had doubled overnight. The reduction in lending led to a downturn in all kinds of business sectors. Apart from that, the cost for insuring credits increased, shoppers had difficulties to pay mortgages, leading to a fall in retail sales. Several well-known companies like Woolworth bit the dust. Another one bites the dust. A major issue was the unemployment. Not only did the unemployment rate rise, but as more and more people became unemployed, there was a drop in tax revenue.
So, people had to pay less taxes, simply because they were out of money. How is this a negative effect?
The answer to this question is to be found in the circular flow of income. Let's look at it and focus on the taxes. They are one of the components of withdrawals, but the money the government receives from the taxpayers is used to boost the economy, for example, to encourage the production of public goods and services, like helping unemployed people. Accordingly, there were cuts to public spending. The government was unable to help the unemployed, let alone to boost the economy, which was still shrinking. The GDP continued to fall, so that by the end of 2008 the country was officially in recession. As an attempt to stimulate growth, the government cut the rate of the VAT in November the same year. However, house prices had already fallen by 10.5%. And the fact that many unemployed people started claiming unemployment benefits intensified the economic downturn, leading to even more unemployment. London was most affected as many people were employed in the financial sector. This included, for example, developers, builders, and estate agents. Also, there was short-term working in the car and truck industry.
The crisis had effects on all people. Why did people who worked in the aforementioned occupations suffer more from the crisis than others?
People had little money and therefore had to spend it wisely. They would only buy necessary things like food. In short, any industry that did not involve essentials suffered from the crisis.
To lend or not to lend? That is the question. Everybody needed money. Why didn't the banks just lend money to people?
Banks had low reserves, especially as many people were afraid to save their money in them because they feared they would go bankrupt.
This is a quote of a very important man.